Hi guys, how you doing? It's NeoFX with Black Flag Trading again. So I wanted to show you really quick the best way, in my opinion. Okay, I mean it is always an opinion. Obviously, there's different ways to get to different things or to the same result sometimes, but there are very few of those ways. Okay, whereas there are a million ways to fuck it up. And I want to show you how not to do that, and most importantly, how to find opportunities. So I have a chart. By the way, it's April 7th, 2017. It's about 2:30 in the morning, Central Time. So it's been a little way too many late nights this week. I usually don't do as many, but it's been some good trading on the London session. But um, I'm about to shut it down. I just wanted to show you guys very quickly how I mean, if I told you, obviously this is 7.5 years of experience being accumulated here. I'm not saying that you should be here overnight. You shouldn't, because if you do, I want to get pissed. I'm kidding. I'm just saying it's just not possible to be able to look at this and know right off the bat what to do, because I don't need to draw trend lines or anything right now. I can look at this chart, and eventually that's where you want to hopefully get to. Okay, you have to be able to look at something, and you have to have a certain what I call spatial intelligence, which obviously comes with time. Some people have that concept a little more than others. They can kind of orientate themselves a little better, but I can look at this and right off the bat know exactly what's going on. Now, whether the next step will be what I think it is, obviously that's the beauty of trading, right? We never really know, but I mean we have a certain idea that happens from time to time, concepts that you've verified and confirmed with yourself, and that's basically the meats and potatoes of trading. You just go off of what you know works, and hope it works the next time again. That's it. That's all it is. So, what do we have here? Well, here's how simple I'm going to make this. If you guys know how to how to draw trend lines by now, hopefully, you should know this. If you watch my other videos, I always say that once a trend is broken, a couple of things happen, but the one thing that happens more than anything else, okay, is this. And obviously you have to draw the trend lines in the correct way, because for instance, you have to connect those, in this case it's an uptrend, those higher highs, right? Well, the thing is this would have been fine up to this point, but once we have this new high, you have to reposition this. You have to know how to adjust the trend line as new highs are made, or new lows if it's a downtrend. So you have to connect those last lows before the new high. And if you draw them correctly, hopefully you're gonna be able to see the next piece of the puzzle. And this is how your thinking should go. Okay, this is the Canadian yen, by the way. Sorry, this is the Canadian yen. I mean, you probably realize by now, but this is a weekly chart. We have a beautiful head and shoulders here that formed a couple years ago, and we went from we went 3,000 pips down after that, because that's what head and shoulders do. And this is a head and shoulders on a weekly, so you know that move was going to be huge. It's not textbook, okay? It's not that symmetric. This left shoulder took a little longer, but doesn't matter. It's a head and shoulders nonetheless. It's up to you to recognize it. And that's the beauty of it too, and that's what really comes with experience. Some things are really, really hard to teach, and I found that out with some of the people that follow me, and some family members and friends that I have a few guys that are making decent money already. Some friends of mine, Ryan is, Todd is, Craig is doing all right. Dwayne has really, I mean, he hasn't had a losing month for like the last 9 months. based on these concepts. And I haven't spent a lot of time with them either, but I noticed they do some things sometimes, or they miss out on opportunities that I'm able to see and they don't. And that's because, on those rare occasions where you have a little bit of there's some ambiguity, let's call it, in the structure where it's not really textbook as I taught them in a certain example. Well, that's where your interpretation comes in. That's where your vision comes in. That's where your experience comes in. Okay, so yeah, not textbook head and shoulders, but I'm telling you, once this happened, this is what I will look for. Once you break the trend, which obviously got respected for so long, okay, because that's what a trend line should do. Prices, every time they come back to it, they should bounce off of it. And they did. Had a little bit of if you've done this for a while, had a little bit of a red flag on this one, okay? It poked through it a little more than it should have, but that's fine. It still got respected. It went up. Well, this is what happened after that. So solid break, and most idiots out there, and man, I'm telling you, be very careful who you listen to online. Okay, I don't know who's taught these people this stupid crap, but they say, oh, it broke the trend line. Wait for the next full candle or bearish candle to close, and blah blah blah, and then go short. No, no. Why do that to yourself? You're gonna get smoked more often than not. I promise you. I've been there. What you want to do every time your trend line breaks, okay, you want to wait for a pullback to the backside of the broken trend line. Okay, and there's ways to even figure out where that's gonna be. In this case, I can already see on a daily here, there was a Gartley pattern, A, B, C, D, which is the C of this down A, B, C. So now we have to start thinking south. Okay, I don't want to complicate it with the Gartley. Let's just keep it simple. Look at that. Look at that. So now we have to start thinking south. So your Fibonacci should be drawn from last swing high to the last low on the break, and then look for their retracement. A retracement happened at a beautiful 618. I mean, perfect. That's our golden ratio, right? That's the best possible spot that you can buy or sell retracement, Fibonacci retracements at. And it wasn't hard to really guess where it was going to come up to, because it's the back side of the trend line. I mean, poked a little through it, but what I mean by it wasn't hard is it wasn't hard to guess it was going to come up here, is because look at the previous structure resistance on this left shoulder, and head and shoulders typically are pretty symmetrical in the left and right shoulder. So anyway, point is, this would have literally been a very solid sell on a weekly chart from 101. The first target, to be conservative on this, I would have done the 127, but technically, if you know my rules on Fibonacci's, if prices bounce on the 38, 50%, or 618 retracement levels, it typically has enough energy to go down to the 618, and it did. It did. But to play it safe, I typically get out on a 127, and look what it did, because these two extension levels, okay, retracements are your A, B, C, where you buy or sell in this case, and then your extension levels are the 127 and the 1618. If prices had come up, pulled back all the way to the 786 or the 886, I use this level, most people don't, but I use it, then it would have only had enough energy to come down to the 127. If it bounces before that and makes new lows, well, you confirm the Fibonacci ABCD move along with this huge reversal pattern. So we would have targeted the 1618 and eventually went there. So now you say, okay, great, we got 2,000 pips in 8 months. Awesome. On a standard lot, what is that? 20 G's on 2 lots is 40,000 bucks. Okay, with a, I mean, pretty unbelievable risk reward. You could have risked 100 pips here, which is way more than I ever do. Way more than I ever do. Even on daily swings or weekly swings, you don't have to, because there's ways to zoom in here and really confirm where that last point is because you're gonna draw those counter trend lines, and the moment that breaks, the moment that breaks, okay, is your confirmation of going south. So you could have had a unbelievably tight risk reward. I mean, you could have gone for, 100 pips to 2,000 pips is 1 to 20. That's if you put 100 pip stop. But anyway, my point is this. So after this, you say, okay, well, what's next? Well, same shit all over again. Same shit all over again. Guys, keep it simple. Just do what works. Okay? There's two reasons. It's either one or two reasons why you're not making money. The one most important one, and I know this is kind of cliche by now because a lot of people talk about this, but I'm telling you, I've tested it on myself and it's true. Now I have a twist on it, but based on my own story. But I'm telling you, the psychological side, and it sounds kind of like it makes people look like they're crazy or they're weak. It's not. What I mean by that is this: if you have a grasp of what's going on, okay, like we do here, and you're still not making money, then I'll tell you what it is. I'll tell you, you're either not patient to wait for these setups to work, okay, to wait for it to come to your pullback, or you're, I promise you, which was my problem for a long time, you're over trading it. You're over leveraging. You're being a little too greedy. Okay, it goes hand in hand with being greedy, and it's something that you're just gonna have to fucking work at. I mean, it's just, I can tell you all day long, don't do it, but I'm telling you, I recognize that it's a rite of passage when it comes to trading. You're just gonna have to go through it. I mean, I've blown up countless accounts, but it finally kicked in when I got tired. Uh, I mean, that's what happened with me. I don't know what the catalyst should be with you guys, but I honestly got sick of myself for doing the same shit all over again. And I mean, I have taken accounts even early on. I mean, I got a grasp of this pretty early on. I perfected it more obviously now, but I have taken several accounts from 3 to 500 bucks to well over 10,000. I took this one winning streak. I had 287 bucks on there. I took it to $13,000. I remember I was in Mississippi working at the time. Uh, in about a month. If if you don't, that was at 400 to one leverage. I was trading with an overseas brokerage. But if you don't think that's possible, I'm telling you, think again. I had an unbelievable winning streak, so I knew that I was getting this, but I kept blowing up accounts. So what does that tell you? If you understand if you get the gist of what's going on technically, and you're losing money, then it's your approach, it's your attitude. Okay, you're being either too fucking aggressive, so you're gonna have to just scale back. And what really helped me is I was spending way too much time, and it's the reason why I'm able to analyze it so precisely. Had I not put that kind of time into it. But what I'm saying is, I was taking time out from family, friends, from work. I had to scramble with work because, you know, I mean, you're looking at charts all freaking day. Then you got to make up for. I mean, that's what pays your bills. So you can't really neglect it that much. Eventually, you're gonna have to do some work. So it's not everybody can do it, but it is a sacrifice, no doubt. I mean, I'm not. I'm telling you, I would do you a uh, big disservice if I told you that this was easy. Once I learned it, once everything clicked, then I can honestly tell you that it's very easy. I promise you. But getting there is extremely hard. It's extremely hard because not everybody can take that mental and emotional ass kicking. So it's up to you. And the other thing that helped me, kind of, and that's why I shifted more towards from a scalping to a swing trade, because it allowed me to sit back, and that allowed me to test that side of me that I had to work on, which was patience, and I wanted to always be in the action. um, and I was able to perfect it. I was able to conquer it, and it works so much better for me. That's why this is gonna be at least a month trade, because we're gonna aim for about 1,000 pips. I'll show you in a second, but I just love these time frames, daily and weeklies, because I mean you'll get just as many pips, if not more, with I mean, a 1/10 of the volatility. You know, a lot of the daily stuff, I believe, I still scalp, don't get me wrong. If I can snag 30, 40 pips really quick in the morning, yeah, I will. I trade the London Open a lot. You know, that's why I'm open. I mean, that's why I'm up at 3 o'clock in the morning. But, you know, I do that when I can, if the next day's schedule allows. I don't sleep much anyway, so it don't matter. But, you know, so it's a grind, absolutely. But the opportunities are there if you know how to spot them. So the other reason, if you're not making, so if you have a good system that you know works, where you back tested it, and you're not making money, obviously it's your approach. You're either too aggressive, you're over trading, and most importantly, you're probably not waiting for these setups that you know work, but you're not waiting for it. You just have that bug, and I've been there. I get it. But just value your time. That's what helped me. Value your time. I mean, I put way too much time into this. It helped me to really understand it. But at the same time, I mean, it was a big sacrifice. Family, time, friends, you name it. I mean, this was it for a few years in the beginning. This was it. I was obsessed with it. And, you know, I started making some decent money finally, and I was very happy because you could see finally the results of the hard work. But then I'm like, I was still glued to it, and I'm like, shit, even if I make $1,000 a day, it's not worth it. I'm telling you, I'm not trying to sound condescending, but it's not worth it if you get glued to this to the laptop all day. So you have to find some kind of a balance, okay? And this is what works for me. Um, anyway, so let's get back to the technicals. I just wanted to let you know. So one side is the approach. The other side is if you have the discipline. Some people are lucky naturally, where they have those traits. They're a little more patient. They're more conservative. They're not as aggressive as maybe I am, but they just have a shitty system, and it doesn't work. And what they do, they go back to another system, or they have a good system, but they just, they don't recognize the fact that you're gonna lose sometimes. Okay, by sometimes I mean you can have one, two, three, four, five losing days, and that's where your thick skin has to come in and say it's okay. Stick to the system if you know it works, and eventually you'll make it back and some. I promise you. So you either have a wrong system and have the discipline, or you have the, I'm sorry, yeah, or you don't have this discipline and have a good system, but you don't have the discipline to follow it and to apply. It's either one of those two things. That's it. So, what happens now? You said, okay, well, um, we're looking down, obviously, right? We're going south. Same thing. You connect those lower highs in this case. Okay, we have an inner and outer trend line. The inner broke. The rule is once the inner breaks, it goes to the outer. If the outer breaks, well, big red flag. We're probably about to reverse. And sure enough, exactly what happened here and what happened there and what happened there is happening over and over again. It broke it. What do I say? Let it come back to the back side of it. Now we're looking up again. It's reversing. Enjoy your Fibonacci's 50% retracement, beautiful, right at the back side of the broken trend line. Yes, we want to buy. So your two levels for Fibonacci's are 127 and 618. But ideally, you want to draw the down Fibonacci's on this big swing and see if you find, some confluence here, some correlation that lines up. In this case, we have the 618 falls right between the R127, okay, R127 and I'm sorry, 127 and 618. So I think it's gonna go there eventually, but shit, why not keep it safe? Look at this 50% level. Let's go for that because look, there's very strong support here, and previous support becomes future resistance. So we're gonna go for the 91 level. We're at 82.50. Okay, just remember where you heard it first. uh, Ideally, if you want to be more cautious, I mean, I pick these bottoms all the time, but and tops. Sometimes I'm wrong. There's ways to work around that too. But if I'm wrong the first time, believe me, the next time on the same swing, on the same uh, ride, I'll be on it. I promise you. It's okay. It's risky to pick bottoms like this, but if it works for you, But the ideal trade, the ideal cautious move here will be this. Draw this counter trend line on this daily candles, okay? Here's a daily chart. Draw this counter trend line, and ideally what you want is you want a break of that. Let me take this off. So what you want is prices to break. How do you copy this crap? God, I hate this shit. And then you want it to come back to the back side of it, and then so that's the ideal. If you want to keep it extra super safe, that's what you can do. You can wait for prices to break through the counter trend line, come back to the back side of it, which is exactly the exact same concept as we used to buy this, because that's what this did. That's what this did. It came down, okay, it was south, 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 south. It was a downtrend for a year and a half. Well, it just broke it, came back to the back side of it. I mean, I say it's a buy. So it's April 7th, 2017, Canadian JPY. Buy at 82.50 if you're watching this video. I would honestly buy this, okay? I mean, it's up to you. You do whatever you want, but I'm probably going to put a decent position here. And then if I get that break and come back again of this counter trend line, I'll probably add to it. So we're going for 850 pips, 82.50 to 91, okay? We'll keep our eyes on it. Obviously, this is going to take, a few weeks to get there, but if you can wait a month for 850 pips which on a half a lot would be 40, about 4,800 bucks. On a lot would be 9,000 bucks almost. Couple of lots, depending on your trading account, will be 16,000 bucks. If you can wait for 16,000 bucks in a month, well, then I guess you got it like that. But I'll gladly wait for that kind of money for a month or 2 months. So, and in the meantime, you look for stuff elsewhere. So again, it's April 7th, 2017. I hope this helps. It's pretty simple. Fibonacci's and trend lines and counter trend lines. That's it. And obviously candlestick formations. But so Canadian yen, it's a buy from 82.50 to 91. We'll keep our eyes on it. Thank you.